There's a pattern flashing on Bitcoin's chart right now, a signal that's called every parabolic move in crypto's history. Every time this shows up, Bitcoin and altcoins have exploded higher. And guess what? It's happening again right now as we head into August. But that's just the start, because today, the SEC dropped a new rule that could send even more billions flooding into Bitcoin and Ethereum, giving Wall Street and corporate giants the green light to go all in. In this episode, I'm breaking down Bitcoin's rarest and most accurate signal, what the SEC just unleashed, and why Ethereum, altcoins, and TradFi are lining up for a run we may never see again. And make sure you watch until the very end, guys, because I've got a very important life lesson and you guys don't want to miss this. It will likely change the course of your life. So stick with me, guys. We got a banger lineup today. Let's get into it without any further ado. All right, I want you to see one of the major reasons August is going to be an explosive month for crypto. It's a signal, a pattern on the Bitcoin chart that has no exaggeration, called every face-melting rally this market has ever seen. And right now, guys, it's flashing again. Now, you know I don't pretend to be a technical analyst guru. I'm not a day trader, but even if you're just here for the big picture, you can't ignore a signal that's been 100% accurate for over a decade. Across 4 different cycles, 2013, 2017, 2021, and it's happening right now in 2025, there's a clear pattern that shows up every July. Each of these monthly candles has a long wick to the bottom. In trader speak, that's the market shaking out weak hands. Sellers push the price down, but buyers are coming in strong, soaking up the dip and closing the month much higher. These dip lower wicks are classic momentum shifts, where the bulls quietly take control and the stage gets set for a major reversal. Let's zoom in and see how this played out cycle after cycle. July 2013, big wick to the bottom, boom, market reverses. July 2017, same thing. July 2021, another deep lower wick, buyers taking charge. And now, July 2025, the candle doesn't look exactly the same, but guys, I got a good feeling the exact same story is playing out. This happens every single year after the halving. It's the same. Sell in May and go away has been the typical thing that says, hey, we slow down in the summer. Going into Q3, Q4, boom, right? So the charts don't lie. History doesn't lie. It's the same thing, cycle after cycle. So what happens next, guys? August. Every single cycle, August is when the fireworks start. The hesitation is gone. Buyers rush in. The trend flips, and suddenly Bitcoin breaks out, setting the pace for the next explosive phase of the bull run. Let's take a closer look at these moves. August 2013, Bitcoin launches 12x in just 4 months. That's over 12 times your money. August 2017, a 6.5x in just 5 months. August 2021, keep in mind, in that cycle, we had a double top. But even still, in a weaker rally, you nearly 2x your stack in 4 months. And that's Bitcoin. Keep in mind, we've been seeing diminishing returns, which is quite normal for a maturing market. But altcoins went on an absolute tear. But here's something else to keep in mind. Every time from that August breakout, the rest of the bull run only lasts 3 or 4 months before topping out. It's explosive, it's fast, and by the time the crowd wakes up and the retail piles in, boom, it's over. So the question I often find myself sitting here wondering is like, are we going to go back to this 4-year cycle? And things definitely feel different this time around. They felt different in every previous cycle. There's always a reason why maybe the 4-year cycle is extended. But this time it fundamentally feels different at its core. We haven't even seen retail rush back in yet. We're seeing a steady, healthy growth in both Bitcoin and Ethereum price. Not crazy parabolic run and moves yet, but that could come. The more parabolic the markets get, the more we have day after day of Bitcoin going up 5 or 10% and altcoins going up 25 to 50% or even 100% a day, the more likely we are to get a blow off top. But for now, things seem quite healthy. But we have all of this stuff happening, right? We've got the lower rates coming soon. We've got big, beautiful bill, $5 trillion spent over the next several years that will flow back into the economy, flow back into everyday people who could invest into crypto assets, into retail, things like this. But I think the best thing for us to do is probably assume that the 4-year cycle is still intact, unless it just feels different and the charts and technicals tell us something different. We'll be watching that closely, guys, so make sure you're subscribed, because together we're going to try to do the best we can to preserve our gains in this bull run and not round trip them like we might have done before. So now let's drop the TA and get to some of those macro factors now that I think will keep this market pushing forward. This will give you a little bit more color on my train of thought when I think about the cycle extending. First, let's break down what the SEC just implemented, because this is where things start to get really interesting for crypto. On July 29th, the SEC gave the green light for in-kind creations and redemptions for Bitcoin and Ethereum ETFs. Now, the biggest players can move real Bitcoin and Ethereum in and out of ETFs directly without any slow and expensive detours. Now, every share can be created or redeemed with actual coins instantly and efficiently. Here's why this is such a big deal, guys. BitMEX research studied over 10,000 global ETFs. They found that funds using the old cash-only method had tracking errors and extra trading costs that just don't cut it for serious institutions. With the new in-kind model, these costs shrink down to a few basis points. That level of precision is exactly what the largest pension and endowments demand before they move in real serious capital. And these funds have serious capital. I mean, we're talking in the magnitude of trillions of dollars. There's also a massive tax advantage here. With in-kind redemptions, big investors can swap ETF shares for Bitcoin or Ethereum and delay paying that capital gains tax they otherwise would have to if they went from Bitcoin ETFs into cash, for example. For high net worth clients, corporate treasuries, and insurance firms, that can mean saving millions of dollars on these taxes and fees alone. This move also pushes liquidity and trading volume to a new level. Now, ETF shares can be created or redeemed on demand, which means you'll see tighter spreads, better price action, and way more capital coming in super smooth. You might wonder how much difference this actually makes. But let's look at gold, because this exact setup was a turning point for that market. When the SPDR Gold Trust launched with in-kind creation, it allowed big banks and funds to move actual gold into the ETFs and not just cash. The result? Over 5 years, that one ETF absorbed more than 1,000 tons of gold. At the same time, gold's price multiplied. We're talking about a move from around $430 an ounce in 2004 all the way to $1,800 by 2011. Now remember, Bitcoin moves at the speed of light compared to gold. So I can't imagine that we'll need to wait 7 years for a 4x. I think that'll happen much, much sooner. But the reason is simple. When the world's biggest investors finally had a clean, tax-efficient way to buy and hold real gold at scale, the floodgates, they opened wide open. Ownership became frictionless, prices re-rated, and gold ETFs became a core piece of institutional profiles. That's the same playbook the SEC just handed to Bitcoin and Ethereum. The difference now is this time the market is global. It's digital, and the capital waiting on the sidelines is even bigger. And there's another thing I think that people are kind of overlooking about this. It's just something that I know because I've been in Bitcoin for such a long time, that when customer wants to get out of the ETF, right? They want to close their position or whatever. They can just take out their Bitcoin or their ETH. They don't need to receive cash, which means that sell doesn't need to happen on the market, right? And what happens is even if someone wants to close out their position and they have the chance to take back their Bitcoin or ETH or cash, and they receive Bitcoin or ETH, they're going to think twice about selling those very valuable, very scarce assets for worthless fiat. If this is just a psychological thing that really happens in real time. For me, if I ever have to think about selling my Bitcoin, I'm like, oof, what am I really selling it for? What am I trading this super scarce, super valuable asset for? That psychology, I think, is very important alone, aside from everything else we just mentioned. And there's even more. The SEC just made it possible for way more options trading on Bitcoin ETFs, raising the cap to 250,000 contracts and allowing new kinds of flexible options. In plain English, guys, this means traders and big investors now have more ways to protect their positions or make bigger moves using the actual ETF, not just betting on futures. It adds more depth and flexibility to the market, making it safer and more attractive for the biggest players. You can already see the impact. In just the last 12 trading days, US spot Bitcoin ETFs have attracted $6.6 billion. These funds now hold a record 1.3 million Bitcoin. That's over 6% of the entire supply. With in-kind redemptions in place, there's nothing slowing down these flows at all. These regulatory steps from the SEC just gave Wall Street a green light. You guys are clear for absolute takeoff. In other words, you're going to the moon. Oh, did you see my little spaceman astronaut over here, by the way? Guys, I know the background is changing every day and it's kind of a mess and it looks like I'm working on it. New place, new office, new studio setup. Let me know in the comments below what you think I should do. I need some design help. I'm planning on putting like a big TV screen behind me so we can put some things up there. I don't know. Let me know, guys. I'm just tinkering with it every single day. So you guys who watch this channel on a regular basis get to see me tinkering. I don't know. Guys, the kind of flows that we're getting from the ETFs are just absolutely mind-boggling. And just as I suspected, and later confirmed by the interview that I had recently with Matt Hogan and James Seyfarth, these are only expected to accelerate in the future, right? Because at first, when the ETFs first launched, every investment advisor was very conservative. Guys, you should put 1 to 3% of your portfolio in there. And now we're seeing things like 4 to 15%, or even the other day we talked about a 40% allocation. How much more aggressive did that get in just the span of 1 year? And we also learned from Matt Hogan that it takes on average for Bitwise customers 8 meetings before they commit to the ETF. 8 meetings, and they do their meetings pretty much quarterly. So that's 2 years before they actually first hear about these Bitcoin ETFs, having the first meeting with BlackRock or Bitwise or others before they actually put in cash. And then they're going to do it conservatively. And then they're going to assess things over the course of 6 months or whatever. And then maybe they up it a little bit more. And you can start to see how all these relationships that are being built are only going to continue to allocate more and more. They're not going to slow down. So let's get specific about who's leading the new wave of crypto accumulation and how massive these numbers have actually become. Let's start with Strategy, the former MicroStrategy. They just added another poetic 21,021 Bitcoin to their treasury, funded by a $2.5 billion stretch preferred stock raise. That brings their total stash to a staggering 620,791 Bitcoin, acquired for about $46 billion at an average price of $73,277 per coin. Just in 2025, they've added over $2.46 billion in Bitcoin and achieved a 25% Bitcoin yield year to date. To put that in perspective, Strategy now holds nearly 3% of all Bitcoin that will ever exist. And they have no plans to slow down. Their 4242 plan is targeting a total capital raise of $84 billion for Bitcoin acquisitions through 2027. When you hear that, that really makes you question if we'll ever see a real nasty bear market ever again, at least for Bitcoin. Does Bitcoin decouple from altcoins? I don't know. But when you hear news like this and the things that we're about to talk about, it really makes you wonder if we're going to start to see Bitcoin slowing down at all. Or if these dips, if it does have a little sell-off, these dips will get bought up immediately, it feels like. The question I want to ask you guys now is, are you paying attention? Between the ETFs and Strategy alone, that's nearly 10% of all Bitcoin supply, and they're not slowing down. What is that going to be next year, in 12 months from now? What is that going to be in 24 months from now? Is Saylor and ETFs combined going to own 25% of the supply? What happens when America actually starts buying Bitcoin and putting it in their strategic reserve? We know it's going to happen. It hasn't happened yet. And yes, we were kind of hoping that in the report today that was released from the Presidential Working Group for Digital Asset Markets, we were hoping we would see some guidance on the strategic reserve, but we didn't, right? But what we're about to continue to talk about in the show is massive mainstream adoption. Now, what I can tell you is the day that we see the US actually start to acquire Bitcoin, this is when I just put the flag in and say, guys, this is massive mainstream adoption. It's happening. Like, the amount of FOMO globally will be insane. And if you're not in the market by that point, you might get completely left behind. And strategy isn't the only giant stepping on the gas either. The competition among public companies to amass Bitcoin has never been more intense. Look at Mara Holdings, the world's largest public Bitcoin miner and the second largest corporate BTC holder after Strategy. In the second quarter alone, Mara broke company records for profit and revenue, reporting over $1.2 billion in earnings before taxes and other expenses. Their Bitcoin treasury has grown over 170% in the past year and now holds 49,951 Bitcoin. And to top things off, they've also raised around $940 million to fund even more Bitcoin purchases and expansion. So not only are they mining Bitcoin, but they're also backing up the truck and loading it up as well. I mean, hey guys, strategy is in a class of its own, but let me give you some context of just how big I expect these treasury companies to be over the next 10 years. Let's say Mara is able to double their stack over the next 10 years. I think that's quite reasonable, right? They acquired already 49,500. Let's say they double that, they get 100,000 Bitcoin in the next 10 years. And we see Bitcoin, right, go to $10 million per coin also over the next 10 years. Now, that's heavily dependent on the growth of Bitcoin, of course, but I believe that we're on the cusp of this massive mainstream adoption. And if that happens, then 10 million is super reasonable. So 100,000 Bitcoin times $10 million puts them at a $1 trillion balance sheet. $1 trillion of assets on their balance sheet. Now, when you look at tech companies traded on the NASDAQ, their market cap is trading at 4 to 9 times their balance sheet. So even if you put that right in the middle, let's say 6x, that means they're trading at a $6 trillion market cap, which puts them 25% higher than NVIDIA. And you can go up and down. You can play with these numbers if you want to see how I came up with that logic. But even if Bitcoin only goes to 5 million over the next 10 years, and they have 100,000, that still puts them at a $3 trillion market cap, one of the top 5 companies in the world. And that's much smaller than Strategy. Imagine Strategy's market cap. I mean, doing this video really made me think about maybe I should go buy some Strategy shares. I mean, they're probably going to go down in if there is a bear market, but maybe not. I don't know. Now let's add 21 Capital, which is already backed by Cantor Fitzgerald, Tether, SoftBank, and Bitfinex. According to Bloomberg, 21 Capital holds around 43,500 Bitcoin, which is already about 1,500 more than they projected at their launch. Tether alone transferred 37,000 Bitcoin to their addresses this year, and 21's total stash is worth roughly $5.13 billion at today's prices. But this is a true top-down strategy. As the largest companies worldwide accelerate their Bitcoin accumulation, it's changing how medium and small businesses approach crypto as well. This is a really important part I want you guys to pay attention to. Suddenly, Bitcoin is on the radar for firms that wouldn't have considered it even a year ago. Take KV Group in Hungary, for example. They're not some massive multinational, but that's the point. It shows the Bitcoin treasury model is going mainstream and everyone can do it. And even small to medium-sized businesses with some cash on their balance sheet are also adopting the Bitcoin treasury strategy. Maybe not because they want their stock to go up enormously, although I'm sure they hope that it does, because they see it's better for their business model. It's better than holding worthless fiat on your balance sheet. Institutions and companies might be the ones grabbing all the headlines right now, but we all know who sparked this movement. It was the early believers, the everyday people who stuck with Bitcoin even when the media called it a scam, even when Warren Buffett called it rat poison squared. They're the ones who laid the groundwork for everything happening right now. So to the Bitcoin family, all you guys who have some Bitcoin, congratulations. This moment belongs to us just as much as it does Wall Street. Look at this table, guys, and you'll appreciate the scale of this movement. 40% of all Bitcoin that will ever exist is now tracked among the top public and private treasury holders, exchanges, miners, and institutional wallets. And that number is almost certainly going to continue to climb. And that should make you realize just how rare it'll be for someone to ever own one whole Bitcoin or even 0.01. So to put all those pieces together, the arms race to acquire Bitcoin has gone global. Strategy is loading up with billions from public offerings. Mara and other miners are holding more than ever before. New firms like 21 Capital are outpacing even their own bullish targets. And now medium and small businesses are joining in globally as well. As we covered in yesterday's show, billionaire Bill Miller said he believes every company will eventually become a Bitcoin treasury company. The biggest players on earth are treating this as a race. Game Theory 101. All right, now let's switch gears over to Ethereum because a new corporate supercycle is starting to take shape and the numbers are getting harder to ignore. First off, a big happy birthday to Ethereum. Congratulations on turning 10 years old today, ETH. In crypto years, that's basically retirement age. Most coins are lucky to make it past kindergarten, but ETH is still here breaking records. And to celebrate, the SEC just acknowledged BlackRock's application to add staking to its Ethereum ETF. So happy birthday, ETH, and welcome to the big leagues. A few shows ago, guys, I told you, or last week it was sometime, I told you that this was going to happen, right? When BlackRock does something, like they almost always certainly get approved. And I told you what I thought it would mean for ETH. And what we've seen since we talked about that, even weeks ago on June 10th, 6, 7, 8 weeks ago, we talked about how it was likely to start to see Ethereum outperform Bitcoin at that point. And that's what we've seen literally every day for weeks now. Ethereum inflows are outpacing that of Bitcoin. Now on to the data. According to a new report from Standard Chartered, corporate treasury companies have bought 1.26 million ETH. That's about 1% of all ETH in circulation just since June 2025. Think about that. In just 2 months. And this pace is only expected to accelerate. Standard Chartered's head of digital assets, Geoffrey Kendrick, says ETH treasury companies are just getting started, obviously. They will likely 10x from here, which would mean treasuries could ultimately hold 10% of all ETH in circulation, if not more. To put that in perspective, ETF inflows for ETH during June and July 2025 were just over 2 million coins, marking the strongest buying streak on record for ETFs ever. The largest ETH treasury company right now is Bitmine, which aims to accumulate, listen to this, 5% of the total ETH supply, requiring them to net buy another 6 million coins. And Bitmine isn't alone. More companies are launching bold ETH strategies and bringing heavyweight investors with them. For example, we've got ETHZilla, which started as 180 Life Sciences. They just announced a $425 million private investment round with backing from over 60 major investors, including Electric Capital and Polychain. ETHZilla is rebranding as an Ethereum treasury company with Electric Capital as its asset manager and is working closely with top DeFi builders as a dedicated DeFi council to maximize on-chain yield and directly support the Ethereum ecosystem. ETHZilla's new plan is straightforward. They intend to use their ETH treasury to earn yield through staking, DeFi, and other on-chain strategies, while also supporting the Ethereum network itself. This approach stands out. Unlike most US ETFs and corporate treasuries that simply hold ETH, ETHZilla aims to be proactive, working with DeFi experts to make their treasury an active part of the ecosystem. You might hear the ETHZilla strategy and think, great, another Hail Mary from a legacy company on life support. Fair point, guys. But remember, just 5 years ago, MicroStrategy was a low-growth software company that most people had never even heard of. But then it put its balance sheet into Bitcoin, and suddenly, the company's value absolutely skyrocketed. Sometimes a bold move like this is exactly what turns a struggling business into a leader. And as if that weren't enough, the second largest ETH holder among public companies is SharpLink Gaming, or SBET, now holding over 438,000 ETH after a recent purchase of 77,210 ETH in a single transaction. More than all the new Ethereum issued over the last month. Talk about insane supply crunch, guys. These treasury accumulations caused ETH to outperform Bitcoin in recent weeks. The ETH BTC chart has climbed from 0.018 in April to 0.032 today. That means that the ETH price grew twice as much as the Bitcoin price in the same period. ETH ETFs saw their 2 strongest weeks ever for inflows, bringing in 1.59 billion and 2.1 billion, topping Bitcoin ETF flows both weeks. All right, guys, listen to this. This is kind of funny. I just thought it was hilarious, right? So some guy at Standard Chartered, an analyst, says, there's a real chance that ETH could break above $4,000 by the end of the year. Bro, it's at 38 right now. It was at 39 a few days ago. Do you really think it's going to get to over 4,000 by the end of the year? I mean, I don't know what you guys think. Let me know in the comments below, but I think it'll be well over $6,000 by the end of the year. at least probably, if not 7, 8, 9, 10, $4,000. Way to have a brave, bold prediction, buddy. Ethereum remains the top platform for stablecoins and DeFi, with more big money now able to stake, lend, or use leverage on-chain in ways traditional ETFs just can't match. The bottom line, Ethereum's corporate supercycle is just getting started. With major treasuries, dedicated on-chain strategies, and record ETF flows, the pace and scale of ETH accumulation is quickly catching up to Bitcoin and opening new doors for every player in the market. Look, a lot of people have asked me like if I have the same kind of conviction for Ethereum as I do Bitcoin. Not quite, just because Ethereum has competition. And I think that once there's two paths could happen. Ethereum could come up with a solution that actually kind of unifies all the layer twos in Ethereum so that all the liquidity is interoperable and people don't need to bridge over layer twos, because that sucks, right? And something like Solana is cheap and fast, but it doesn't have the track record that Ethereum does. And like I've been saying on these videos for years, that what Ethereum has that the other layer one alternatives don't have is a solid track record of not going down. And when you're Wall Street and your institutions, you don't care. It's larger than Solana, yeah, but you don't care about like a $5 fee on Ethereum. And you don't care about waiting 12 seconds for your transaction to be confirmed. That's way better than days like it took before. So there's a very strong use case for something like Ethereum, which is still light years better than legacy systems. Not quite as fast as Solana, but like Wall Street and TradFi don't care. If you're like a Gen X, Gen Z, Gen Alpha, and you want to play games on, like that's going to be Solana and Sui and things like that, right? But my point is that I have very high conviction in ETH becoming almost like a silver to Bitcoin in today's world, right? And it's a different type of digital asset, but it's the number 2 digital asset. And it's a thing that everyone's going to be using for the foreseeable future. And it's a hard switch also to jump. Once these institutions build their infrastructure on Ethereum and Solidity, it's not easy for them to rework all of that architecture into the Rust programming language for Solana, for example. So we'll see how it plays out. But I still have the majority of my net worth in crypto in Bitcoin and Ethereum, by far. And before we jump into how crypto is taking over real-world finance, just a quick word from today's channel sponsors. BloFin is a no KYC exchange, open to Americans, except for those in New York and Washington. Sorry, guys. Low fees and every trading pair you can want, all in one place. Deposit and receive, guys, up to 20% cash back on all your trading fees. And if you sign up with my link, send proof, and you'll get access to my private Telegram group. Altcoin season is coming, and I'll be sharing my best calls there. And have you ever felt crypto rich, but your bank account tells a different story? Guys, that was me for ages. It was so hard to pay for things. My portfolio looked great, but when it came time to pay for things like dinner, flights, just a coffee, moving money around was always a hassle. Then I found Xapo. With Xapo card, I can load up with Bitcoin or stablecoins and spend them anywhere. Plus, it comes with a premium feeling black metal debit card. No need to sell my crypto, no complicated transfers, just tap, pay, done. High limits, real exchange rates, up to 1% Bitcoin cash back, and even daily interest on my cash. Suddenly, my digital wealth feels a lot more real. Plus, if you sign up with my referral link and become a member, you can save $500. If you're done feeling crypto rich but cash poor, try Xapo, hit the link in the description below, get your Xapo card, and unlock your crypto for real life today. All right, guys, now back to this juicy show. Crypto is moving into the core of global finance and daily business, with new on-chain infrastructure coming online almost every week. eToro, for example, one of the world's largest trading and investment platforms with over 30 million users globally, just announced it will tokenize the 100 most popular US-listed stocks and ETFs as ERC20 tokens on, get this, Ethereum, enabling 24/5 trading, not 24/7. Okay, they still want the weekends off, but better than before. Anyway, DeFi integrations and eventually self-custody or direct transfers into DeFi protocols. These stocks will be available to users far beyond Wall Street, breaking down borders and making equity trading truly global. And it's not just eToro pushing the boundaries. Robinhood is building its own layer 2 blockchain on Arbitrum and launching over 200 tokenized US stocks and ETFs, also tradable, get this, 24/5, with zero commissions for European investors. And we've got Backed Finance, a Switzerland-based RWA issuer that just rolled out more than 60 tokenized blue chip stocks on platforms like Bybit and Kraken, putting companies like Netflix, Meta, Tesla, and even Coinbase onto DeFi networks and making them available to traders everywhere. Right now, tokenized stocks only represent about $418 million in total value, a fraction of the overall $21.3 billion in tokenized RWA market. But industry leaders at the Tokenize This conference in New York said this market could become a multi-trillion-dollar force in the coming years. And this is actually where I kind of get excited thinking about this. Putting these tokenized stocks as ERC20s, and then the potential DeFi integrations. Imagine that I take my Coinbase or I take my Circle shares, and instead of having to sell them, I can just go put them in Aave and take out a collateralized loan and use that. Boom, instant unlock, more efficient, more capital efficiency, more money. It's just a smoother system. Permissionless, by the way. No need to ask permission from banks or anyone else. Just boom, bringing real world assets on chain and plugging them directly into our permissionless DeFi systems. That is sweet. And on the payments front, you got PayPal. They just launched a new crypto checkout tool for US merchants. Thank you. I wonder if I'm still banned from PayPal. PayPal banned me for using crypto years and years ago. And how the tides have changed. They unlocked these payments in over 100 different cryptocurrencies, including Bitcoin, ETH, Sol, Tether, USDC, and XRP. Payments can be settled instantly in PayPal's stablecoin, the PYUSD, which, by the way, I hate that name. It just looks like Pi USD, but anyway. Or they can be in fiat, with a transaction fee of just under 1%, which is substantially lower than most credit card fees. The new tools integrate seamlessly with wallets like Coinbase Wallet, MetaMask, Kraken, Binance, and others. The move comes as PayPal's own stablecoin, PYUSD, has seen its market cap jump nearly 80% since January 1st, rising from $497 million to $894 million. Meanwhile, new partnerships are bringing crypto features to the services people use already every single day. Coinbase has also partnered with Samsung Pay, rolling out crypto trading and funding features to over 35 million Samsung Pay users in the US alone. For many, this partnership is their first seamless one-tap exposure to crypto, bringing the gap between everyday mobile finance and the world of digital assets. This is fantastic. I just wish that they integrated Apple Pay already, because I used to use Samsung. I used to be hardcore anti-Apple, and then I just learned that PCs just can't keep up with MacBooks. So I got a MacBook, and then ultimately I got the iPhone, and I used to, now I'm using Apple Pay. So please, guys, Apple Pay integrate crypto. But anyway, if not, just get a Xapo card. And on the regulatory front, the US Senate is now considering a bill that would let mortgage lenders consider digital assets like Bitcoin and Ethereum. And we've talked about this before, right? For collateral as homes. That would be fantastic for me. We saw this from the Fair Housing Finance Agency a while back, and now they're trying to put it through as law. But it's not just here, right? Elsewhere in the world, in Australia, you got Block Earner, who just launched home loans that would let you use Bitcoin as collateral, thanks to a recent court decision that gave crypto lending the green light for the Australian mortgage market. Cool. At least it's happening somewhere else. Should be here in the States soon enough. All of this signals a rapid shift. Real-world assets, payments, and even property markets are going on-chain. And mainstream adoption is now being driven by a mixture of new infrastructure, regulatory clarity, and the kind of tech partnerships that seamlessly make crypto part of everyday life. I will just tell you guys, I love making these videos because it just keeps me so in tune to what's going on, and it literally blows my mind. Someone that's been in the space for 13 years now and has had to try to figure out how to live off of crypto for those 13 years. And now things like Xapo and PayPal and even Venmo, all integrating crypto, make my life so much easier. Sure, it's not pure ethos of it, and these guys are still making money as middlemen. Fine, I would rather just send my stablecoin or Bitcoin or whatever directly from P to P, from person to person. But in the interim, while everyone catches on to the rest of the world and learns how to make peer-to-peer transactions and self-custody wallets, at least we have these kind of solutions that help make things easier today. So what does all of this mean for you guys? In just 1 week, we've seen the SEC open the gates for Wall Street to move straight into Bitcoin and Ethereum. Major companies and miners are locking up nearly 40% of all Bitcoin. Are you listening? Treasury giants are fueling fresh Ethereum supercycle. And now crypto is powering stocks, payments, and even the mortgage market. I know this whole in-kind thing might have sounded dry and far away, but as we learned today, This is what changes the game. It's an upgrade that lets big money move fast, and it's a win for every Bitcoin and Ethereum holder. When you're feeling anxious on those red days or sideways weeks, just remember, this is how every big cycle feels before the next leg up. And as you guys saw, it's just the beginning. I'm betting August is going to be a hot month. Only those who hold with conviction will be there when things turn super bullish. All right, guys, so here's the big lesson for today. Owning just 0.01 Bitcoin is a huge deal, right? But if you can aim, if your goal, if you can get to 0.28 Bitcoin over the next year or 5 years or 10 years, having that number is the magic 1% club. That puts you in the top 1% of all the people on this planet to ever hold Bitcoin. And that will also set you up for massive success and completely change your financial future. I know a lot of times in the space, there can be distractions. This meme coin, this person did this and that, 100x and blah, blah, blah. But if your goal is to make sure that you set yourself up financially, and that should be the number one priority for all of you guys. If you're not there already, if you're not financially free and secure, then it's not such a difficult path forward. The goal is, how do you get to 0.28 Bitcoin? Because that will put you in the multi-millionaire status in the next 5 or 10 years, and likely even much higher as we start to see the dollar being debased and inflation. I know this might sound crazy to a lot of you guys, but if Bitcoin becomes the global reserve, which we expect it all will, and we're seeing right before our own eyes right now, then you're going to be completely set up. And also, now I'm pretty bullish on Ethereum too. If you own 1.6 ETH, it also puts you in the 1% club. So if you want to become in the top 1% of the world as far as wealth is concerned, for me, it doesn't make any sense today to value your wealth in fiat. You should value your wealth in Bitcoin, right? So that 0.28% puts you in that 1% of the richest Bitcoin holders in the world, and 1.6 ETH to be the richest Ethereum holders in the world. That's a huge perspective. It doesn't set the bar so astronomically out of range. And so that's why I would love to help you guys. Let me know in the comments below if you want to join the 1% club. I would love to see every single one of you guys watching these videos be at least there by the end of the year. If you guys are with me, make sure you destroy that like button. If you want to do it together, destroy that like button. Let me know in the comments below. That is your goal. I will help you guys get there. We will play the altcoins when the market's exploding. We will play those. We will take profits into Bitcoin and ETH, and we will do our best to make sure that you guys all are part of the 1% club. That's all for today, guys. Until next time, make sure you stay sharp, continue to stack your Satoshis. You know why it's so important now. And some Ethereum. I'll catch you guys in the next one. See ya.